Hey, what's up, my friend? So, in today's video, you'll discover how to read candlestick charts like a professional trader. So, who is this training video for? Right? It's meant for a few group of traders. Number one, you're the type of trader that is completely new to candlestick, right? You do not know how to read it, you don't know what it means, then hey, this video is for you. Number two, you're the trader who knows that candlestick charts can help you better time your entries and exits in the market, right? And you want to learn how to use this powerful tool, then hey, this video is for you as well. And finally, if you're the third group of trader who simply wants to read the price action of the markets without relying on lagging tools like indicators and stuff like that, then hey, this video is for you as well. Sounds good, right? And one favor, right, that I want to ask from you. Alright, subscribe to my YouTube channel, right? Click the button below and hit the thumbs up button. This way, right, whenever I publish a new video, you always stay up to date. You never miss a single, training from me ever again. Alright, so hit the subscribe button and the thumbs up button. Do it right now. It's all below. Subscribe and hit the thumbs up button. Have you done it? Then let's get started. So firstly, right, what is a candlestick chart? Well, a candlestick chart is simply, right, a method of reading a price chart. There are different ways to read. You have Renko chart, bar chart, line chart, but by far, right, based on what I've seen, candlestick chart is the most popular approach, right, to reading prices on a chart. So if you do not know what's the difference between a candlestick patterns and a candlestick chart, it's quite simple. A candlestick chart is made up of a series of candlestick patterns. So if you've seen a chart, you see something like this, right? This is maybe this is a bearish one. The next one is a bullish one. Okay. Then you have a little bit of a wick sticking out. So this individual one, this is called a candlestick pattern. This is another candlestick pattern. So you have many different candlestick pattern on your chart. And all this, right, the series of candlestick patterns is what we call a candlestick chart. When you join all these candlestick patterns together, is what we call a candlestick chart. I think I draw this pretty badly, so just ignore this portion. So just imagine a series of candlestick patterns over here. All of it formed together is a candlestick chart. So naturally, right, before we can talk about candlestick chart, we need to understand, what is a candlestick pattern, because that is the foundation of candlestick charts. So a candlestick pattern simply shows you the open, high, low, and close in the market, right? The prices. So for example, if you are looking at it on the daily time frame, it shows you the high of the day, the low of the day, the opening price of the day, and the closing price of the day. And a little bit of history, right, for those of you who wonder, where candlestick patterns, where candlestick charts came from. So basically, it originated in Japan, right, sometime in the 1700s by a rice trader called Munehisa Homa. I hope I pronounce it correctly. Okay, in the 1700s. Then it was introduced, right, by Steve Nissen, right, to the Western world sometime in recent times, right, and pretty much he transferred all this wealth of knowledge into a book called Japanese Candlestick Charting Techniques. So that's pretty much the brief history about where candlestick patterns came from, originated from Japan, then brought into the Western world, and to what it is right now today. So as I've mentioned, right, it shows you the open, high, low, and the closing price. That's a candlestick pattern. And now, how do you actually read a candlestick pattern, right? So let me, explain to you. So this is a candlestick pattern. I'll just walk you through step by step. So the first one is what we call, when you see a green body candle, is what we call a bullish candlestick pattern. It simply means that the closing price is above the opening price. So this means the market has closed higher for the day. That is why it's bullish, right? The price has closed higher for the day. So you can see that the opening price is here, closing price is here. This is the high of the day, right? You see that the extreme point of this black color wick, they call it a wick, they call it a shadow, whichever suits you. All right, this is the highest price within the time period, and this is the lowest price within this time period. So a candlestick pattern can be shown on a daily time frame, weekly time frame, monthly time frame, 5-minute time frame. So how you read the open, high, low, and close is relative to the time frame that you are looking at. So for example, if this is let's say the weekly time frame, so this is the high of the week, the low of the week, the opening price of the week, and the closing price of the week. if you're looking at the 1 hour time frame, then this is the open, right, of the candle, right, during this particular hour. This is the highest point, right, of the candle within that particular hour, and this is the lowest price point of the candle within that particular hour. And finally, this is the closing price, right, of the hour. Okay, so it depends, which time frame you're looking on, and then you reference to the open, high, low, and close accordingly. So moving on, right, the opposite of a bullish candle is what we call a bearish candle, and it simply means that the closing price is below the opening price. So you can see over here, now the opening price is above, right, it's on top over here, and the closing price is below over here. Right, it's the opposite, right, of the bullish candle. And it makes sense, right? If the market, if the price has, closed lower for the day, closed lower for the hour, closed lower for the week, right? Then, hey, it's usually shown in a red color bodied candles, which is usually not, I wouldn't say it's not a good sign, but it's just the way it's being represented. So it's usually red in color, okay? The closing price is below the opening price. The high and the low, it's still the same, right? It could be the high of the week, the high of the day, depending, which time frame you're looking at for this particular candle. Okay, so this is how you read a candlestick pattern, right? Usually you see it's two colors, green or red. Sometimes it's black or white, depending, how traders want to, adjust to their own preference. But this is how you read a candlestick pattern. Moving on. Two important questions, right? Whenever, you are trading or dealing with candlestick patterns, because a big mistake, right, that traders make is that they say, oh, it's a big green candle, right? Buy, buy, buy. It's a red candle, sell, sell, sell. No, right? It doesn't work that way. I mean, it's not as simple as, just blindly buy and sell based on the color you see on your charts. So whenever you trade candlestick patterns or candlestick charts, there are two important questions you must always, right, ask yourself. First question: where did the price close relative to the range? Right? This question tells you who's in control, and I'll explain why shortly. Second question: what's the size of the candlestick pattern, right, relative to other candlestick patterns? This gives you, right, or tells you the conviction behind the move. Okay, so let's look at the first question, right? Where did the price close relative to the range? Why this is important? So if you look at this, okay, you can see that again, this green one is what we call the body. This black one is what we call the wick. So you can see that for this particular candlestick pattern, right, the price has closed near the upper end of the range. So what is the range? The range is simply the highs and the low of the candle. The range is simply, you take the high and the low, right, from the high all the way down to the low, all right? This is what we call the range of the candle. So when you want to see, right, who's in control, you want to see where the price closed relative to the range. In this example, the price has closed, right, near the highs of the range. So this tells you that, buyers, they are in control temporarily, right? They have closed the market, they have closed the price, right, near the highs of the range. Another example, you can see that this time round, okay, the market still closed bullishly. It's still a bullish close, as you can see that the close is above the open. But if you go back to the first question I mentioned earlier, where did price close relative to the range? The range is here from the highs to the lows. This is the lows here, okay, around here. This is the range. And you notice that the price only closed, right, near the lows of the range. In this case, right, it's what we typically call a shooting star pattern, right? It closed near the lows of the range. So what does this tell you? Well, it tells you that there is strong selling pressure, right, in this market right now. So you can see that if you want to read the price action, right, you can see that there are buyers in control, but they are weak, right? That's why they only close marginally higher. Whereas the selling pressure is very strong. It's from this high over here. At one point in time, right, the buyers, if you can imagine, they have pushed the price all the way up higher to this high over here. And then suddenly the sellers took control and pushed the price down all the way down back, right, near the lows of the range. And finally closing marginally higher. So if you look at this, right, back to the first question, where did price close relative to the range? In this case, it closes, right, near the lows of the range. And this tells you that there is strong price rejection in this market, right? There is selling pressure, lurking around. Okay, so you can see, right, these two candlestick patterns, both of them are green, both of them are bullish, but back to the first question, where did the price close relative to the range? It tells you, right, who's in control. Okay, so I hope that makes sense, the first question. And taking things a little bit further, again, this candlestick pattern, who is in control? Again, look at where the price closed relative to the range. This one closed relatively, near the highs of the range. So the buyers are temporarily in control. Second candlestick pattern, right? The price, it closed somewhere in the middle of the range, right? We can agree that, it's somewhere marginally around the middle of the range. So this tells you that, hey, no one is in control, right? The sellers are not in control, the buyers are not in control, and this is where we say the market is in equilibrium. And finally, the third one, you can see that the price, the body is quite small as well, but the price has, closed at the highs of the range. And if you look at the wick over here, it shows you strong price rejection. I'll explain, right? The market, right? If you think about this, it opened at this level. At one point in time, the sellers were in control. They pushed the price all the way down lower and formed this lows for the day. For example, if this is a daily time frame, then suddenly the buyers, maybe they took a lot of protein shake and creatine and steroids. Boom! They pushed the price all the way back up higher and finally closing at the highs. Okay, so who's in control? Well, where did price close relative to the range? It closed at the highs of the range. The buyers are in control. Okay, I hope this makes sense. So the next thing that I want to talk about is this one, right? What's the size of the pattern relative to the other candlestick patterns, right? This tells you the conviction of the move, right? How much conviction, how much strength there is in the move, right? So let me share with you a few examples. Okay, so let me just get out my charts. Okay, so it's loading. So let's have a look, shall we? Examples here. So I'm going to look at pound Canadian. Okay, so what do I mean by, look at, the size of the candle relative to the other candlestick patterns. So if you look at this, let me just get rid of this watch list, okay? So you can see over here, okay, just follow with me. Market make a strong move, okay, then he has a retracement over here, then market consolidate a little bit. So what I want you to pay attention is this portion over here. Notice, right, the size of this candle relative to the earlier candles. If you notice the earlier candles, they're all relatively small over here, right? They're all quite small, right? Not showing you much sign of, conviction or strength. But this first candle, this bullish candle is the first one, right, that actually shows you a sign of strength, shows you conviction. Notice this candle, right? It has covered, right, the range of the previous 1, 2, almost 3 candles, the range. We call this a bullish engulfing pattern, right, where the candle pretty much engulfs, wrap around, right, the range of the earlier candles. So this shows you conviction, strength behind the move, right? So this is what I mean by, comparing the size of the candlestick, right, relative to the earlier candles to tell you, right, what is the strength, the conviction behind the move. So that's the second question, right? What's the range of the candle relative to the other candles? So here's another example. Okay, notice this again. The market, right, made a strong rally, then it declined and market starts to consolidate, right? Notice the range of these candles over here in this consolidation. Notice that they're all relatively small, right? Not much conviction, not much sign of strength or weakness. And then what happened? This candle, this one over here, large, big, bearish bodied candle, where you see the price, closing lower. There is conviction, there is strength behind the move because, right, you notice the range of the candles, it's larger, right, relative to the earlier candle. So this tells you that there is conviction, there is strength behind the move. Okay, so this is how you read, right, the so-called price action of the market, identifying, strength and weakness. So don't worry about, how to identify trend reversal. We will cover that, in the later part of this training video. But for now, understand, right, the two questions that I just shared with you. This is very important. This is something that most traders who trade candlestick patterns, they never think about it. They just, memorize patterns. Green means buy, red means sell, and then they wonder, why they are losing consistently in the markets. So these two questions is very important. Okay, don't forget that. Okay, so remember, number one, you want to ask yourself, where did the price close relative to the range? Number two, you want to ask yourself, right, what's the size of the candle, the range of the candle relative to the earlier candles? These two questions, right, will tell you, number one, who's in control, and number two, the strength or the conviction behind the move. Okay? So at this point in time, you're a candlestick pattern pro, right? You don't need to memorize candlestick patterns. Once you understand this, right, you can read the candlestick patterns, right, with ease. So moving on, right, we have covered candlestick patterns. So now we can finally move on to how to read a candlestick chart. So as mentioned, right, earlier, candlestick chart is simply, right, a series of candlestick patterns. So if you just look at this over here, right, this is one candlestick pattern. This is one candlestick pattern. This is one candlestick pattern. But when you combine all of them together, all of this together, it becomes a candlestick chart. Duh, right, Rayner? Duh. Okay, but still, I just want to make it clear. So how do you read a candlestick chart? So there are, first and foremost, right, back to fundamentals, basics. Candlestick chart, right, can be used to identify the trend. So how do you identify the trend? Okay, so here are a few things to bear in mind. Number one, you want to identify the swing highs and lows in the market. So what is swing highs and lows in the market? So there's a little bit of a subjectivity here, just a little bit, right? But I'm going to share with you a very simple technique. So a swing high is the point on the chart where it's very obvious that swing level. So for example, the market does this, up, down, up, down. Okay, then maybe does something like this, then up like this. So where is the swing high and lows on this chart? So if you ask me, right, if I look at a chart, I would say the swing highs is here, 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 and possibly here. The swing low, it's over here, and over here, right? This one and this one, I won't consider it a swing low because again, it's a minor low, right? It's not the one that sticks out the most in your face, right? When we are talking about swing highs and lows, we want those levels, those points that, stick out in your face, like that, stick out in your face. Those are the ones which I classify, swing highs and lows on the charts, okay? So once you've identified the swing highs and lows, right, the next thing is quite simple, right? An uptrend simply consists of higher highs and higher lows, right? Higher swing lows and higher swing highs. Right? I was wondering, what's the word to use, right? Higher highs and higher lows. Higher swing lows, higher swing highs. And a downtrend is just simply the opposite, right? You have lower swing lows and lower swing highs. And a range, right, is just where the swing highs and the swing lows, they're all pretty much, in equal area, equal level. So just to, illustrate, uptrend would be something like this, right? Higher swing lows, higher swing highs. A downtrend is just the opposite. Lower swing low and lower swing high and lower swing low. And finally, a range, right, is where your swing lows and highs and swing lows, right, they're all pretty much at similar levels. Okay, so let's have a look at a chart, right, to kind of, illustrate my point. Okay, how do you tell the direction of the trend? So let's have a look, right, back to my chart. Okay, let's, walk through some examples. Euro dollar. So if you look at this right now, right, let's look at the most recent price action. What is the trend of euro dollar right now? Well, using the concept that I shared with you, right, let's identify the swing high and low first. Okay, I am just, to keep things constant, right, I'm just going to use the reset button. So there are equal number of, bars on this chart right now. Because if you think about this, right, the trend it can be subjective depending on, how many candles you look at the chart. If you, put in so deep over here, you might think that, hey, this might be an uptrend because you have a series of higher lows. But if you zoom out some more, right, all the way down back, you can see that this market might be, a long-term range. And if you just zoom in a little bit more, it might be in a downtrend. So can you see my point? So whenever you're trying to define the trend, not only that your time frame is important, you must have, equal number of, candlestick patterns or candlestick chart, equal number of bars on your chart. That's the point I'm trying to make to define the trend. So one way to keep it constant, if you're using trading view, just click reset chart, and that's it. If you want a little bit more depth, okay, just zoom in a little bit, right? That is fine as well. It's up to you. What's important is to keep it constant. So for simplicity's sake, I'm just going to use the reset chart and we'll work with this. Okay, so how do you define the trend, right? So we talk about swing highs and swing lows. So let's, just mark out the swing highs and swing lows right now. This is a swing high. I notice the swing low, a swing low, a swing high, a swing high, a swing low, and possibly this swing high over here. So from the looks of it, right, what I'm seeing right now, live, right? I mean, it's recorded, right? But what I'm literally seeing right now is that the market is making lower swing highs and lower swing lows, right? Let's call it, lower lows and lower highs. So from this, right, I'll conclude that the trend is down. Okay, simple. Another example, right? Let's look at pound dollar. Okay, so you can see that pound dollar, okay, I have some levels drawn over here. I'll just remove this temporarily, right? We don't want to clutter the chart yet. Again, back to basics, fundamentals, right? Identify the swing high and swing low. swing high, okay, swing high, swing high, and I'll say that's about it, right? So you can see that there are minor levels, right? But to me, right, these are all the most obvious swing high levels that I'm seeing. How about swing low? This, this, and this. Okay, so again, generally, we have lower lows and lower highs. The trend is towards the downside. So you can see that there are definitely minor levels over here, like, you know, this one over here I can see, this one here, but they are not major swing highs and lows, right? If you're taking too long to figure out, is this a swing high? Is this a swing low? Then it's not a swing low or swing high, right? It's not a swing high or low. Okay, so if it's there, it's there. If it's not there. Okay, so let's have a look at a few more examples to kind of, you know, nail home this point, right? Let's have a look at one more. Let's say Euro Yen. Okay, so Euro Yen again. What I'm seeing over here, it's this is the swing high, swing high, swing high, high, right? Swing low, swing low, swing low. So you can see that now, right? The market, it's it's still in a slight downtrend, but if you look at the price action, right, you notice that the highs and the lows are relative, you know, on equal area, equal level. So this is where you start to conclude that, hey, you know, this market is in a range, okay, in a range, right, where you have similar highs and similar lows. Okay, one more example, right, just before we move on to the next section. Aussie Yen. So okay, we can see of Aussie Yen over here. I would say this is the swing high, swing low. At one point in time, right, this was also a swing low, right? But after which, when this new swing low is made, right, I'll reference to this. Again, you can see that again, this market is in range. The highs and the lows, right, are at similar level. But what's interesting is that this market now has actually broke below this prior swing low. Okay, so if the market now rallies and collapses lower, you have officially another new swing low over here. And at this point in time, right, you have a lower high and a lower low. Okay, a lower high and a lower low, and the market is likely to move on into a downtrend. Okay, so this is how you read the direction, or rather identify the trend of the market using, you know, just basic technical analysis concepts. Swing high, swing low. Good, simple, powerful. Then let's move on. And oh yeah, if you're still watching this video, hit the thumbs up button and subscribe to my YouTube channel, because you don't want to miss such, you know, goodies in the future, right? Okay, so we have covered how do you tell the direction of the trend. Moving on. How do you identify the strength of the move? How do you identify the strength, right, of the move? So again, just want to share with you a couple of concepts. Number one is what I call the trending move. Okay, this trending move and retracement move. So as you know, right, earlier we talked about, you know, uptrend and downtrend. When the market is in an uptrend, you have higher highs and higher lows. So what I want to pay attention, right, to you is this. Right? This is what I call the trending move. And this is what I call the retracement move. Right? Retracement move over here. And this is the trending move. So if you notice, right, the trending move, right, usually when the market is strong, the trend is strong, right, you will notice that the size of the candles, the body of the candles, it's large. You have large bodied candles. And on the retracement move, right, you will notice smaller bodied candles. So if this is what you notice, right, in the trend, it's telling you that the trend is healthy, where the buyers are in control, right? So this is how a healthy, good-looking trend would look like, where the trending move has larger bodied candles and the retracement move, right, has smaller bodied candles, and vice versa for a downtrend. So let me you know, share with you a few examples of this concept called the trending move and the retracement move. Okay, so let's have a look at the WTI. It stands for Western Texas Instrument, I think. Some oil product. Not exactly sure what's the exact name for it. So let's see, WTI, crude oil. Okay. Let's see. Let me just type crude oil. Okay. I think we can use this as well. It doesn't really matter. Okay, so you can see over here, crude oil. Where can you see the trending move and the retracement move? Right. So let's pay attention to this area over here. Okay, so the trending move. Okay, it's this portion over here. Trending move, retracement move, trending move, retracement move, trending move, retracement move, trending move, retracement move, trending move. So you pay attention to the size of the candles when the market is making the trending move, right? Large bodied candles, large bodied candles, large bodied candles. On the retracement move, small bodied candles, and this one is a relatively small bodied candles as well. So this tells you that, you know, the strength of the trend, right? It's strong towards the downside. Okay, this is how we, you know, look at the strength of the move using the trending move and the retracement move concept. Moving on, right? Another example, New Zealand yen 4 hour. I think it's quite a good example as well. Okay, can you see it? Right, let's focus on this area over here. Trending move, retracement move, trending move, retracement move, trending move, retracement move. Look at the size of the candles. That's what I mentioned earlier. Trending move, you have larger bodied candles, and on the retracement move, the size of the candles tend to be smaller. So what does this tell you? It tells you that the strength of the move, right, the strength of this downtrend, it's healthy, it's strong towards the downside. Okay, when the strength is getting weak, right, what you'll notice is that the trending and retracement move, right, where the retracement move starts to make a large retracement, large bodied candles, right. So this is a signal that, hey, you know, this trend is getting weak, and, you know, it might consolidate or reverse from here. So this is the first clue that you want to pay attention, right, that the trend is getting weak or might even reverse. Okay, but that's for later on. We will, you know, cover more in depth. But for now, I just want to, you know, nail home the trending move and retracement move, trending move and retracement move. Okay, let's have a look at another example. Dollar against the Norwegian chrono. Okay, daily time frame. Again, you can see, right? Okay, so this one is a little bit less textbook example. You can see that, you know, we have this trending move, and this retracement move, right, is quite deep as well. Notice the range candles getting large as well. Okay, then you have this trending move, slight retracement, then this trending move is not very strong, and then this retracement move is very strong, right, the large bodied candles. Okay, so you can see that this is, you know, how trading is going to be like. It's not going to be, you know, all textbook examples as I just shared with you. And then finally, this market starts to, you know, make higher highs and higher lows, right? You can see that, you know, trending move, retracement move, trending move, retracement, trending, retracement, trending move. So now this portion over here, this trend, right, is looking stronger, as, you know, you notice that the retracement move, the candles, the range of the candles, it's smaller compared to, you know, the earlier prior retracement moves. Okay, so again, the concept is the same. Trending move, retracement move. And the trend of this market, what's the trend, right? Again, using our swing high, swing low concept. Swing high, swing high, swing high, swing low, and I'll say this swing low and this swing low, right? These are the most obvious levels to me. Higher highs, higher lows, market is in an uptrend. Okay, let's see what other examples I have for you. So a little bit more examples before we conclude this section. Dollar against the Sing. Okay, now you look at this. Trending move and retracement move, right? Trending move, retracement move, trending move, retracement move, trending move, retracement, trending, retracement, trending, retracement move. So one thing to note is that the trending move and the retracement move, the size of the candles are largely similar. Okay, you can notice that the range of the candles, the body of the candles between the trending and retracement move, they are quite similar. So this is where you can conclude, right, that now the buyers and sellers, right, they are somewhat in equilibrium. So that you got something looking like a range market right now. So buyers and sellers, they are somewhat in equilibrium. So if the market, you know, were to break out higher, then the trend is likely to continue higher. And if the market were to break down lower, then, hey, you know, this uptrend might, right, reverse now towards the downtrend. So again, you can see that, you know, price action analysis, right, trending move and retracement move, it gives you clue, right, to what the market might potentially do next. Potentially, right? Nothing is certain in trading, so it's all dealing with the probabilities. So I hope this is a good example to highlight to you. And let's have another one, Aussie New Zealand weekly time frame. So again, you just look at this, right? Market right now, just compare the trending and retracement move. Trending, retracement, trending, retracement, trending, retracement, right? There's all these minor swings as well. But largely, we can conclude that, you know, the trending and retracement move, they are all pretty much having equal bodied candle size. So we can say that, you know, buyers and sellers now on this time frame, they are largely in equilibrium, right? Notice that the highs is here and the swing low is here, right? All at a similar price level. Okay, and just one more additional chart, right? It's just to, you know, to talk about this concept, right, which is I think Bitcoin. It's a good one. Okay, so I want to share with you is the Bitcoin daily time frame, right? And just pay attention, right, to the trending and retracement move and swing high and swing low. This is really all you need, right, to read price action of the markets, to read candlestick charts. So if you look at this, again, let's go back to basics. Identify swing high, swing low. Swing low, oh sorry, swing high, swing high, swing high, swing high. Swing low, what about it, right? Here, 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 right? Notice it's pretty much a similar level. And if you study chart patterns, you know that this is what we call a descending triangle. Lower highs into support. But chart patterns aside, right? Next thing I want you to pay attention to is the trending and retracement move. Okay? Trending move, retracement move, trending move, retracement move, trending move, retracement move, trending move, retracement move, trending move, retracement move. What do you notice about the retracement move? Right? Pay attention to the retracement move once again. Alright? Because the trending move, they're all pretty strong, right? The range of the candles are all pretty large, 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 and large. But what about the retracement move? This is quite large. This is quite large. This is getting smaller. This is getting even smaller. And this is non-existent. So what is it telling you? So you see, is your brain juice moving? Well, it's telling you that, hey, the buyers, they're clearly, right, starting to lose control. The sellers are now in control. As you can see that the trending move towards the downside is still strong, whereas the retracement move towards the upside is getting weaker and weaker. Plus, your lower swing high points that we have just discussed earlier signals to you that, hey, this market is likely to break down lower. Okay, and in this case, it's a cherry pick example. Yeah, the market did break down. All right, but the main thing that I want to highlight to you is that, just observing the swing highs and lows, just observing the trending and retracement move will give you, right, the insight, right, to the price action, to the strength and weakness of the market. That's really all you need, right, to read the price action, to read candlestick charts. Okay, I hope this helps. Right, this is one good example of Bitcoin. Just one final one, shall we, right? Euro Canadian. I just want to show you that, trading is all about probabilities and never certainty. So if you look at this Euro Canadian, right? If you look at it, it's pretty much similar to the Bitcoin, right? You have, lower swing high and, swing lows are pretty much at a similar level. And if you look at, again, the trending and retracement move, the retracement move, is getting weaker and weaker, right? Here is quite strong, and over here is quite strong. And after here got a little bit weak. But in this case, the market, it didn't break down. In fact, it broke out higher. Okay, so again, price action analysis is all about probabilities, right? That's pretty much the main thing that I want to share with you. I don't want you to look at this chart and make it think it's all so simple, and then when you trade it live or demo, you realize, man, why am I losing? Or of course you have losers, right? Because trading, it's all about probabilities. There are winners, there are losers, right? But so you have to prep yourself for it. So this is my reason of sharing with you this particular chart, that nothing is 100% or perfect in the real world of trading. Okay, so now that we have covered quite a bit on the trending move and the retracement move, how do you find trading opportunities, right, using candlestick charts? Okay, so I want to share with you a very simple formula, right? I call it the TAY formula. TAY stands for trend, right? Trading with the trend. Area of value. So what is area of value? It can be stuff like a trend line, right? Price coming to a upward trend line, that is an area of value. Price coming towards the 50 period moving average, that could be an area of value. Price coming into an area of support, that's an area of value. So there are different ways to represent area of value. And then entry trigger. So what is the trigger that we get you into a trade? It could be stuff like candlestick patterns, a hammer, shooting star, bearish engulfing, bullish engulfing pattern, or maybe just double top, breakout, build up, stuff like that. So entry triggers, there are again dime a dozen. So I just want to share with you, right, how you can use this formula. It's not an exact strategy to say, right? It's more like a formula, a template, a framework that you can use to go and develop your own trading strategies. All right. So this is the formula that I want to share with you: trend, area of value, and entry trigger. So let's have a look at a few examples, shall we? My dear, my love, my buddy, my friend. Okay, first one, let's look at the 5-year. Okay, the daily time frame, right? This is the 5-year Treasury note futures. So basically, it's a US bond. So I don't want to use any tool, right? So again, look at this chart, right? What is the trend? Okay, we talk about identifying trend, swing highs and swing lows. So in this case, right, trend is clearly towards the downside. Area of value is the price at this area of value. Well, if you draw support resistance, you know that there is actually this level over here, somewhere about here, right? Where the resistance, right? So now, number one, you have the trend over here. Number two, you have an area of value. In this case is resistance, And number 3, do we have an entry trigger? So entry trigger, as I mentioned, can be many things, right? It can just be a straight off, a price rejection, right? Where a long wick sticking out. Could be a bearish engulfing pattern. Can be a shooting star. But in this case, what we got is quite a strong price rejection, right? I think the exact term we'll call is the dark cloud cover, but basically it shows you that the market, right, has rejected higher prices. The market at one point in time closed at this highs, and then next candle it gap up and close, right, near the lows of this the range of this own candle, right, near the lows of the range, right? So there is sellers are temporarily in control, and there is in terms of the conviction behind the move, right? If you notice the range of the candles, it's not as large as the prior one, right? But it's relatively large, right? If you look at over the last series of 4 or 5 candles, so there is some conviction behind this move. Okay, so again, trend, area of value, entry trigger, and it's all the concept that we have been discussing right today. Let's see what else I can find. Dollar Canadian. I think dollar Canadian. Okay, just one example. Dollar Canadian. So again, we look at this, right? You see dollar Canadian right now, it's again, let's analyze, right? Trend. You can see that it's in an uptrend. Okay. Trending move, retracement move, trending move, retracement move. You can see that right now the market is somewhat near the highs of the retracement move. I mean the trending move. Okay, so I think we can draw a trend line just to connect the lows. Something like that, right? So when I draw a trend line, I like to connect as many points as possible. I like to touch as many wicks or body included as possible. If you learn how to do it, right, I have a video called the Trend Trading Secrets, right? You can have a look at the video where I talk about trend lines. I think it's trend line trading strategy, that video. I'll put a link below so you can reference to it. But anyway, right, you can see that market now is in an uptrend, and if you go down to the 4-hour time frame, again, we look at again trend, area of value, entry trigger. So I think 8-hour time frame is also possible. Let's keep it to the 8-hour time frame. Okay, so you can see that again, number 1, we have the trend. Number 2, where's the area of value, right? If you ask me, area of value is possibly at this level over here. Previous resistance that could act as support, plus you have this upward trend line, which could have some buying pressure at this area as well. And the third thing that we'll look for, right, it's the entry trigger. So if the market can come down lower, right, spike down lower, and then finally close bullishly higher near the highs, right, that will be a valid entry trigger, as it tells you that the market, the price has rejected lower prices. So that will be a valid entry trigger to go long. And then we have all 3 ingredients as well: the trend, the area of value, and the entry trigger. So it's again the Tay formula. Right, so this is basically trading using multiple time frames, but again the concept is the same. Let's see what else. Let's one more example. Okay, so WTI. Is there anything? Okay, I think this was the one I was looking for earlier. Okay, so WTI again. We can look at it the daily time frame. So this one is a little bit different, right? But basically, if you look back on this chart, let me just plot out some level here. I believe there's one over here. Okay, so you can see that there is a level over here on this chart that I want to bring your attention to. Notice that this is actually previous resistance that could act as support. Okay, so price did break out, and finally it didn't really respect it much as support, but this nonetheless is a level that's respected by the market. It has rejected this level a few times, right? Notice this wicks over here, this upper shadow. Okay, so again, same formula, same concept. Trend towards the downside, you have a swing highs and swing lows, lower highs, lower lows. Area of value, are we trading from an area of value? So this is a little bit different, right? Because now the area of value, right, is at this previous support that could act as resistance, right? Price has now break this support, now it could act as resistance. So now this is an area of value. Okay, and then entry trigger. What's this entry trigger? Well, this one can be a couple of things. It could be as simple as an entry trigger where the price breaks below this swing low. That's an entry trigger. Or if again you use multiple time frame, right? The 8-hour time frame is where the market break this downward trend line, right? Where it breaks the the upward trend line plus, right, this swing low. So that could be another entry trigger as well. And then your stop loss, right? For me personally, I like to have it above this level over here, somewhere here. Give it some buffer. Okay, so now if the market were to rally up higher, at least I have this market structure, which is this area of resistance to contain this lower prices. I mean, of course it can break, right? But at least I have, an obstacle, something that, it's in my favor to, so-called, hold the price lower, right? So that's where I put my stop loss. Okay, so this is another example of the TAY formula: trend, entry trigger, trend, area of value, and entry trigger. Okay, just one more example, shall we? So I've been talking for almost 40 minutes now. It's quite long. I think one of my longer videos. Pound Canadian. Okay, so you can see that in this case, right, you can see that this market, right, what's the trend? I'll say it's towards the downside, what, plus a little bit of range in recent times. Market has, spiked up higher, right? And then you have this so-called bearish candle lower. At this point in time, right, market is heading higher. So again, if you trade off this, bearish reversal candlestick pattern, you can just simply go short. Have your stop loss, right, a buffer, a distance above this highs. Alternatively, right, which is what I'm going to talk about later, is how you actually analyze the price action of the markets, right, to so-called, give you a better risk to reward. So in this case, right, what you can do is that if you go down to the 4-hour time frame, okay, and you know what, I'll talk about this later on since the concept I've not covered yet. But for now, right, again, the TAY formula, it applies for this as well. Okay, so with that said, I want to cover the last section for today's video. If not, it's going to run close to an hour. Right, it's how to actually identify trend reversals in the market, how to predict market turning points, right, using, again, candlestick charts and price action analysis. All that we have covered so far. So again, if you're still watching this video, subscribe to my YouTube channel and hit the thumbs up button. Alright? I know I sound a little bit irritating, but it's fun. So, okay, anyway, this one over here, how to identify trend reversal. So just two things to pay attention to. Number one, you want the price to lean against a higher time frame structure. That's the first thing, very important, right? Whenever I trade trend reversals, whenever I try to attempt to, predict market turning points, right, I want the price to lean against a higher time frame structure. Number two, right, I look for price action weakness on the lower time frame. So how this looks like is that, let's say, for example, the daily time frame, right, price comes into this area of resistance. Okay, so this is the higher time frame structure, resistance. What I'll then do is I'll go down to the lower time frame. It can be the 2-hour time frame or the 4-hour time frame, right? Just a lower time frame. And I'll look for price action weakness on the lower time frame. So let's say this is the daily. Okay, the 2-hour time frame, right, or 4-hour, I'll look for something like this. You know that the market made this upward move, so your 2-hour time frame will look, like an uptrend. So what I'm looking for is price action weakness, right, where the market shows me signs of weakness, where, the retracement move, right, what we spoke about earlier, is getting larger, right? So strong bearish retracement move. And then the trending move, right, is somehow lost its energy, right, where the prior trending move is very strong, now it's getting weak. So it looks somewhat like a bear flag pattern. So in the market, if it breaks below this low, right, there's a good chance that it could continue lower. Okay, and on top of it, right, this over here, this section is leaning against the higher time frame structure. Right, so this is what I do to identify, trend reversals in the market. Okay, so let me just walk you through this concept. So there are many variations to it, and it's not possible to cover everything, but so let me just cover with you a few examples so you kind of understand what I'm trying to bring across. So let's have a look at this, right? So we can look at this one over here, the Pound Canadian, this example. So earlier, again, this is an area of resistance. Okay, so if you want to better time your entry, get a better risk to reward on your trade, right, you can actually go down to the 4-hour time frame and watch, right, how the price action unfolds. Watch the candlestick chart, the candlestick patterns, to let you know that, hey, right now the sellers have regained control. So what you're seeing over here is, again, trending move, retracement, trending, retracement, trending, retracement. So notice this retracement move, right? The range of the candles are getting larger. This is a good sign if you want to short the markets, because it's telling you that there are selling pressure coming in. So there are a couple of ways this can unfold. Number one, the market stage another rally, and then comes down lower, and then starts to consolidate, right? Small range candles telling you that, the buyers are unable to push the price higher. And if it breaks below this low, right, then hey, there's a good chance the market can continue lower. Another variation could be the market just simply, makes somewhat of a lower highs into support like this, and then it breaks down, right? That could be another variation, right, of the price action weakness in the market. So this is, what I mean by identifying trend reversal. You're basically using a combination of multiple time frame analysis, market structure, and then price action weakness, right, on the lower time frame. So in this case, right, if you were to trade off this price action structure. So if, for example, you were to short this breakdown over here, you can actually reference your stop loss either from this high or this high. So you can see that now your stop loss is tighter compared to trading off the daily time frame where your stop loss is larger, right? Because you're now trading off, or rather timing your entries based on this 4-hour time frame price action analysis. Okay, so there's no right or wrong to it. It really depends on your trading style and how much time you have devoted to trading the markets. Okay, so let's have a look at a few examples before we conclude today's session. Right, Aussie Canadian. Okay, so you look at Aussie Canadian. Notice that on the daily time frame, okay, what I'm seeing over here, there is let me just draw the level. Okay, so you see over here, right, you have the price is at this previous support that now could act as resistance. Okay, so it's at this area of value over here. On the 8-hour time frame, okay, again, let's observe the price action analysis. Trending move, retracement move, trending move, retracement move, trending, retracement, trending, retracement move. Notice here this retracement move, the range of the candle is getting larger. Then the trending move gets weaker and weaker, and then now it starts to consolidate near this area of support. No guarantee the market will collapse and reverse, right? But hey, the odds are now in your favor. So if the market now were to break, right, let's say break below this area of support, right, it's an opportunity to go short, stop loss, right? Just reference it from this swing high, give it some buffer, maybe somewhere about here. And, that would be to me, right, it's a trading opportunity to trade it towards the downside, right? So again, it's the concept that I just shared with you. Market is leaning against a higher time frame structure, in this case, a higher time frame resistance, okay? And the lower time frame price action analysis is showing signs of weakness, right? Make sense? Good? Understand? All right. One more example, shall we, before we conclude today's session? My throat is dry. I need lots of water later on. So let's have a look at a trade that didn't work too well for me, right? But again, the concept is the same. So New Zealand dollar. Oh, I thought I clicked it. Okay. So New Zealand dollar, where I want to pay attention is to this portion over here. This is actually a trade that I took. So over here, notice, right? Again, price. Again, trend. Area of value, right? So this downtrend, area of value at this previous support that could act as resistance. And on the 4-hour time frame, right, is where I want to share with you the price action analysis over here on the 4-hour time frame. So it's let me find it. It's over here. Okay, so same thing, same concept. Trending move, retracement move, trending move, retracement move, trending move, retracement move. So notice the retracement move, right? Range of the candles getting larger and larger. Then the trending move, the strength, right, getting weaker, right? Notice the range of these candles right here getting smaller. Here is still quite large, but over here, right, become very small, looking somewhat like a bear flag pattern. This is the key area of support, right? Price break below it. I went short, stop loss again. I just set it a buffer above this swing high, somewhere about here, right? I went short, and in this case, right, market didn't went in my favor, right? But due to the way I managed the trade, right, it hit my trailing stop loss, and I actually, had a loss on this trade. It's a loss of 0.46R. Okay, so the concept, right? This is the concept that I'm trying to bring across. And again, the entry approach, is one thing. How you manage the trade is another thing. Because for another trader who trade this, who just go with maybe a fixed target profit, who take profit at, let's say, I don't know, this swing low over here or this swing low over here, they might get out at a small profit or break even. But for me, I trailed my stop loss on this trade, and it hit the trailing stop loss, right? And it happened to be a loss for me on this trade. So that is another thing to talk about altogether for another day. But again, the main thing to share with you here, it's about identifying trend reversals, right? Market turning points by number 1, identifying the higher time frame structure, and number 2, going down to a lower time frame to read the price action, weakness, strength or weakness, depending whether you want to buy or sell. All right, so with that said, right, let's do a recap, right? It's almost 50 minutes already. Number 1, candlestick chart is made up of a series of candlesticks, right? Candlestick chart is just the full thing. Candlestick pattern is just the individual candles that you see on the chart, right? And before we talk about swing high and lows, right, I want to remind you of the 2 questions again. Number 1, first question is, you want to pay attention to where the candlestick, right, close relative to the range. If you close near the highs, it's good. If you close near the lows, right, it's bearish. If you close in the middle, it's pretty much undecided, right? Buyers and sellers are in equilibrium. And the second question to share with you is, what is the size of the candlestick pattern relative to the earlier patterns? This tells you the conviction, the strength behind the move. Okay? Then we talk about identifying the direction of the trend using swing highs and swing low concept. Then we talk about the trending and retracement move, right? It shows you strength and weakness in the market. Finally, not finally, right? But almost there, we talk about the TAE formula, right? Basically trading with the trend from an area of value and then having a valid entry trigger to enter the trade. And finally, we talk about how to actually, predict or anticipate trend reversals. What you'll do is you use a higher time frame structure like support, resistance, trend line, all right, whatever you use to define your structure, and then price action analysis on the lower time frame, right, to help you, read the price action and to gauge the strength and weakness of the market, whether the market is about to reverse lower. So a few tips for you over here. If you are referencing the higher time frame structure like the daily, okay, you can use either the 2 hour or the 4 hour time frame, right, to read the price action analysis. There is no best time frame, like which is better, 2 hour or 4 hour. There isn't a best because it really depends on how the price action unfold itself. Okay, so generally the 2 and 4 hour, right, it's a good time frame to refer to if you are trading off the daily time frame market structure. Okay, so with that said, right, I have come towards the end of this video. If you want more, right, if this is still not enough for you, Rayner, I want more of your stuff, right, then what you'll do is you go down to my website over here, tradingwithrayner.com. Just scroll down a little bit, depending what you want to learn, right? So today we cover a lot about candlestick charts and price action. If you want even more of it, right, then you go and download this ultimate guide to price action trading. We talk about market structure, entries and exits, volatility contraction, and much more. Click this orange button and I'll send it to your email address for free. Or alternatively, if you want to learn more about trend following, riding trends, right, how do you trail your stop loss and to ride massive trends, then hey, the ultimate trend following guide is for you. Just click this orange button and I'll send it to your email address for free, so you can see that my voice, it's changing. So that's all I have, right, for you right now. So if you've enjoyed this video, again, subscribe to my YouTube channel, hit the thumbs up button, and any feedback or comment, just let me know below. So with that said, right, I wish you good luck and good trading. I wish you all the best, right, and I'll talk to you soon.